I think people were trained in the Google search thing of they just type something in and it gives them the answer. That is not what AI is. To get really good answers, you have to ask really good questions. My average prompt now, I'm going to say it's 60 line. Why would the people that have made billions of dollars in this, for the same reason, who don't believe in the ideological side of ETFs and the government being more involved, and the more the government gets more involved and is actually sponsoring it, we want out. I think it makes sense for people to be taking chips off the table. And I think it's held in there extremely well with that going on. And as I put in the next post, once we start to get a breakout, I think crypto will be the best performing asset this year.
The people who have the most to lose will be the last to adopt Bitcoin and AI. If you are a massive corporation with legacy data, entrenched culture, and billion-dollar revenue streams, you are naturally incentivized to move slowly to avoid breaking things. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
So one of the reasons that I always say that Bitcoin is the purest AI trade is a phrase that Michael Saylor has used, which I think fits in with what you just said, which is the people who have the most to lose will be the last to adopt the Bitcoin. With AI and with what you're describing, the people that have the most to lose will be the ones who avoid do anything for as long as they can. Meaning, if you have something to lose, whether it's data, whether it's revenues, whether it's culture, whether it's whatever, if you're just a person sitting at home building a business, you don't have as much to lose. So I think people have to start realizing that what AI is it is the more you have to lose, the harder it is to go full boat in. On the flip side, if you have nothing to lose, you should be focused on doing it because that's your edge. Because 5 years from now, your value is going to be AI as you put. I think people were trained in the Google search thing of they just type something in and it gives them the answer. That is not what AI is. To get really good answers, you have to ask really good questions. My average prompt now, I'm going to say it's 60 lines.
Oh, wow.
And again, not things like, hey, I'm going to make a recipe. I need a recipe for this. I'm going to combine this. But if I want to really learn something about AI, I did a paper for 22V last week on the NVIDIA Grok deal. It was a very important deal. And the reason it was an important deal is because it matches with what I'm feeling on my phone. I'm not here to sell more Apple products, but AI on the phones is here. And the reason it's here is because my phone, I got the iPhone, whatever it is. I don't know if it's 19, 17, whatever, the Max, blah, blah, blah. I don't know. I had gone...
Jordi's balling.
I had gone a long time without buying a new phone. I didn't realize how slow my LLMs were on my older phone. The reason is that NVIDIA Grok deal, we're already at the point where the memory side is important, the speed. You're not just in the cloud. You actually need your phone to have enough of the new chips to combine the memory in this to be faster and faster. And so the same way that you notice your video, everyone would upgrade the phones because it's like the video would be stalling in it. With the LLMs, if you use them all the time, you need to get the best phone because we're at the point now where that deal between NVIDIA and Grok is really the Inference Edge device deal, meaning they have to come up with new ways, not just for the training models, for the data centers, but actually for the phones. That means how do we get this cluster of really fast performance per watt inside a phone, inside a car. And to do that, you need to bring in a lot more components. So I just think for everyone out there who's really spending time, we've talked a lot about it. You have to commit this year to being able to use AI more and more. There's no doubt about it.
If companies are growing revenues at 8 to 9% and profit margins are expanding without hiring new people, AI-driven efficiency is the silent engine. Visser believes the intangible side of the economy, productivity and efficiency, is being vastly underestimated by traditional GDP calculations. This shift makes bonds uninvestable because they can't keep pace with this level of growth, while stocks, specifically companies that replace human friction with AI agents, are poised for massive gains.
So the GDP over 4%, I think we still have to be careful about a couple things. I think everyone who follows the economy at, say, a very signal level as opposed to including the noise, because the reality is inventory cycles and trade cycles are noise. They go up, they go down. So if you just do final sales, we're consistently right now at 3%. And we've been that way. We just had a quarter that was 3%. The quarter before was 3%. The actual GDP number got up to 4.3. Last quarter was 3 point something. So we are, in terms of, I think, the way that people read in the paper, we're close to 4. But the reality is we're just stone cold growing at a very consistent number. I have 2 angles on this, and I think this year is a really important one. And I actually think the Elon Musk post is important for people to think about. So I've talked extensively about how GDP, you start with a calculation which is not made for this world. It's just not. The intangible part of the economy, meaning efficiency and productivity, it just doesn't fit in this mindset. For us to have really big GDP the way it's calculated, are we going to have a lot of housing sales? Are we going to have a lot of auto sales? Are we going to, because of demographics, because of things, I don't think we're going to have some huge boom. So it has to come from the intangible side. Now, there's 2 intangibles. I do believe productivity and efficiency are going to accelerate this year because of what we've talked about, which people have to just accept. Going forward, companies will not be hiring people the way that they did. So let's think about the jobs number. Forget what you think the jobs number should be. The reality is we have created less than 40,000 jobs a month for the last, I guess it's 5 months now. And it's overstated, which means let's assume it's 0. Let's assume there's been no job creation. But that happened in 2 quarters where GDP was basically 4%. So if you're not hiring people, but you're growing, regardless of immigration, regardless of AI, don't get into the thing. Just say there's no hiring going on, which shows up on everything. By definition, that means productivity is expanding. If you're not hiring people and revenues are still growing at 8-9%, profit margins are expanding, that's productivity. And then GDP, which doesn't necessarily capture it, it's going to show it. So I believe without any doubt, we are not going to be seeing job creation the way we had in the past, but we're still going to grow. So that means we are going to see productivity and GDP gains. The other thing is, with stable coins starting to advance and with AI agents plugging in, you're going to see more volumes, which Caitlin Long has talked about. I've written about it multiple times now. I think it's a brilliant commentary by a woman who's brilliant in terms of thinking about the financial system. More volumes because transactions are happening more. There's more efficiency going on.
There's less friction.
Exactly. There's going to be a higher velocity of money. And if there's a higher velocity of money, that leads to more GDP. So I think those 2 factors are going to come, which is going to make this feel, without it being some hiring boom, it's going to show up in profit margins. It's going to show up in stock prices going up still. But I think those are the 2 places where GDP is going to be. It's a very weird situation because normally you get more GDP from hiring more people who spend more money, taking more debt. That's not going to be the case. So again, I think bonds are going to be completely uninvestable. If you're trying to outperform inflation, I just don't think bonds have enough, not getting enough cushion in there. So you're going into the year where credit spreads are at all-time tights, where 10-year yields are not too far away from where 2-year yields are. We do have a steepening yield curve, but so far it's just going at a slow pace. Stocks, to me, are going to see profit margins, but we're also at the acceleration point for me for a lot of businesses that have not participated yet. The adoption phase is going to be massive, and I want to leave this thought into everyone's minds, and I'm sure at some point we'll get into places, specific areas. But when you make a phone call and you sit on hold, or you get shuffled off to 17 different numbers before you actually get, or you're screaming representative or whatever it is, those areas are the places where you want to start putting money into. If those businesses have revenues growing, they are going to start to be using agents more and more every day, which means their profit margins are going to grow. It's not going to be a huge expense to replace people. And so rather than firing, again, this is more about every year where we normally would have hired 2 million people. Like, just go back. If GDP grows 4% a year, what's the average amount of human beings that we would hire? Well, the number's now headed to 0, which means 2 million people times $50,000 a year on the aggregate. We're talking huge numbers of productivity gains, not including the ones that we can reduce to go through it. So I do think stocks are just going to have another good year. And it's not just in the US, it's globally. I believe this is going to be a broadening out of AI now. It's not just the adopters, it's also the physical side because we're running into the constraints. In terms of commodities, I think they're going to do well. Not all of them the same, but there's a reason why gold and silver are going higher. Gold got the head start because of central bank purchase, but also because people that doubt the system. And I think we're going to continue to have this AI debate on things. I don't want to talk about the long term at this point, but let's just say I think the commodity side is going to remain durable. I think we will have some worries about natural gas and about copper and silver in terms of running out of supply. Elon Musk brought up silver as, hey, this would be a real problem if we're running out of silver. So I think that's going to be fine. And then when you go outside of it, I do think crypto is going to lead the way this year because I think it's directly correlated with the agents. And like I wrote last year, I believe Bitcoin has gone through something that needed to happen, and crypto in general, which is when there's an investment situation like AI, where people think they can 10 bag something in a year or 2 years, why would the people that have made billions of dollars in this for the same reason, who don't believe in the ideological side of ETFs and the government being more involved, and the more the government gets more involved and is actually sponsoring it, we want out. I think it makes sense for people to be taking chips off the table. And I think it's held in there extremely well with that going on. And as I put in the next post, once we start to get a breakout, I think crypto will be the best performing asset this year. The only thing that needs to happen, which will start earlier in the year when Colossus 2 is completed and we're getting up to the 1 million clusters, I just think people have to recognize that the power and the ability of having the data centers to speed up the capabilities is still kind of what's going on. I'm less worried about there being a power shortage. I've spent a lot of time on this. I've written about it. We are going to run up against them. We need a lot of gigawatts for this, but I'm a little bit less worried than I was throughout most of last year. That was a big change for me. I do think it will be a negative for the market at some point this year, that people will worry that we're running out of power, and there'll be complaints. You're already starting to see the states pushing back, but I think there is enough behind the meter technology and creativity that's happening. And I think you're seeing this at MIT, you're seeing this at Stanford, you're seeing it in places where if you listen to more and more of the podcast, this new theme is kind of, it's not just, hey, we need more plumbers and this, we need more engineers who are thinking about the creative part of this, which is really, we're reaching the physics part of kind of where AI goes. And that's why for people that are investing this year, the theme to me is going to be very different than last year. I think value matters a lot when you get into this because you're having a broadening out of people that are benefiting. I think for you and I, as we sit here and talk to people, I think a lot of what we talked about today, which was not planned, is just inspiring people to use it more, to be less scared about it, both from an investment standpoint, but also from a personal inspiration and feeling better about yourself. If you want to move forward in life, I think you have to build a better relationship with artificial intelligence this year.
Whether it's mastering 60-line prompts, upgrading your hardware to handle edge inference, or positioning your portfolio toward the frictionless economy of AI agents and Bitcoin, the window for the early adopter advantage is closing. The question isn't whether AI will change the economy, but whether you will be the one leveraging that change or the one being replaced by it. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.